Now, more from business, namely from a systemic bank, Bank of Georgia CEO Archil Gachechiladze.
Let's tell our viewers that the inspiration to talk to him came from the exclusive interview that you conducted with Fitch Ratings, which said that at least 2 more quarters are needed to see what the real impact of the pandemic is on the banking sector in Georgia.
Correct, Georgi, and one more emphasis also, Fitch called the regulator's approach towards Georgia's banking sector quite unique. This is a direct quote, meaning that other regulators allowed banks not to provision against banks' potential deterioration of the loans at the moment of the pandemic to avoid direct capital hit, but rather to stretch out these reserves in time so that banks could gradually realize them. On this and much more, Archil Gachechiladze sat down with the checkpoints.
It will take us at least 1 to 2 more quarters to see what the impact of this crisis was. These are not my words. This is what Fitch told us in the recent exclusive interview. So what is your take on what impact did COVID-19 have or does have on the sector generally and on Bank of Georgia specifically?
Yes, well, COVID-19 is not a Georgian thing. It's a worldwide thing, and it's affecting us definitely in a major way. So when we saw that COVID was a big issue in China, and it was little by little coming to Georgia, the government and the National Bank have basically taken a decision to have a major charge for the provisioning for the losses that we will encounter during this period of time. And we did create a reserve for the losses for the full year. But much more than the losses, I think the key here when the pandemic started and when the lockdown happened was to make sure that we continued servicing our clients throughout the lockdown. This is what the clients say, but on the other side, you have to keep in mind that making sure that our staff members get to work in a full lockdown when the public transport is not functioning, that's just one challenge. And the other challenge is to move all of the back office to work from home, and that was done within 10 days. And the third one, and that's an interesting one, is to make sure that our cash supply works so that our customers don't feel any problem. Now, the good news is that we have been able to manage this challenge pretty successfully, in fact. And by and large, we have been able to provide an uninterrupted supply of our services to our customers. And then after that, through this lockdown and afterwards also, we have been able to support our customers, especially the micro and SME customers, through provisions of either restructuring or in some cases the working capital facilities that they needed to make sure that they pay their employees. Now, besides this, there were liquidity and capital, and both on this, I think we have plenty of liquidity to make sure that we are able to issue loans to our customers who are in a position to borrow, as well as plenty of capital to make sure that we are very, very strongly standing. So it's a reliable partner throughout this pandemic and tough situation.
Since you mentioned this decision, NBG's decision for banks to preemptively create reserves that was around 1 billion against potential deterioration of loans. This is something that Fitch called quite unique approach from Georgia's central bank. This uniqueness stemming from Fitch's assessment that other regulators restrained from that kind of decision. So what is your take on that?
I think it was unique. Fitch is absolutely right that we have not seen other regulators do the same. So on one side, we saw Georgian regulator asking us to provide for all of the losses that we expected for the COVID-19 pandemic, while the other regulators have allowed the banks to take time to realize what this impact would be and then charge accordingly. I think the Georgian regulators' approach was conservative, and not all regulators can afford to be conservative. The reason why the Georgian regulator was able to do so is because the banks have plenty of capital. And that allows for this kind of conservative approach. At the same time, that created a bit of question mark on the side of the investors because they suddenly saw a deteriorating capital position, and that was based on the upfront charge, which is not unusual, but it was different from how other regulators approach. So we had to explain a bit more to our investors what was done. But after this explanation, I think everybody was calm, and I think our clients as well as the regulator was very happy with the fact that there was enough capital to see the full upfront charge, but at the same time plenty of capital regardless. And on this note, quite frankly, I have to add one more thing, that our investors see the capital ratios in Georgian standards, which is much more conservative than IFRS, the International Accounting Standards. And hopefully soon we will go to the International Accounting Standards, and our investors will see that there's much more capital in the system than the reported numbers, which are based again on much more conservative ratios or the methods that the National Bank employs.
Okay, you mentioned this word expectations several times, but uncertainty is also another word that we hear so often during this pandemic, and we hear this from like multiple stakeholders, be it experts, business, government, IFIs, everyone, so to say. So how do you deal with this uncertainty? And at this stage of pandemic, is there more certainty coming anywhere, from anywhere?
2020 is a year of uncertainty, I would call it, right? It's really unclear how the pandemic is going to develop. Still is unclear when the cure will be available, if ever, and so forth. Nevertheless, there are three main things that we focus on, and one is the operational continuity, liquidity, and capital, and make sure that there's enough of all three for us to be comfortably serving our clients so that we are reliable partner in good times and bad times. After that, when we discuss the uncertainties, there's one friend of mine, a senior friend of mine, has told me, life comes one day at a time. And it's very important to remember that, because if you are in business and you are serving your clients and you have plenty of liquidity and capital, then after that, you have to remember, don't stress about everything, because the life is uncertain, and 2020 is even more uncertain.
Life comes one day at a time, and we also hear that this soundness, so to say, of the banking sector is very intertwined, and especially in Georgia, Bank of Georgia being one of the systemic banks, how the economy performs itself. Do you see this relation even tighter in these tough times? And what do the outlooks tell you? Because what we look at IFI's outlooks, we see that the recovery of the economy might not be as fast and as swift as expected on the early stage of pandemic.
So as you rightly said, making sure that our bank remains a reliable partner in good times and bad times is critical, not only from the perspective of being a good citizen, but also because we are acting as a major bank in Georgia, serving our retail as well as MSME clients and corporates. Going forward, what we see is that recovery will be there, but a lot will depend what happens with travel next year. So if tourism comes back, then we will see a lot of businesses recovering strongly. If we don't see the tourism come back next year, then we will have, I think, a sector that will have its difficult times extended for another year.
Your answer leads to a logical question about debt holidays by banks. Fitch told us that it will keep an eye on how these loans perform further, and this will be one of the key drivers of the next rating and next outlook. What is the tendency there?
In the initial period, I think that kind of holiday was very important, and it was quite costly, by the way, to us. Now we extend this kind of holidays or restructure the loans, provide the restructuring to people that have either lost their jobs or their income has significantly deteriorated. And there are some customers that have gone through this kind of difficulties, but luckily enough, it's a very small portion. It's less than 1/10 of our clients, so it's a single-digit percentage points that have required significant restructurings, and even smaller proportion that will require no interest payment during this period of time. So it's only 1 or 2%.
Mm-hmm. And my last question on uncertainty part, does lari devaluation have impact on this level of uncertainty in terms of doing business?
Absolutely. I think lari weakness introduces a layer of uncertainty in people's minds. For many reasons, even for the non-borrowers that are saving money or are making money in this environment because people have salary or savings or their businesses in lari terms. So having a very clear and transparent policy on that is very important.
Do we have that policy now?
I think there is a policy, but it could be a little bit more explanation for people what that policy means would be even better.
Mm-hmm. Okay. Also, Fitch is stressing this high dollarization of the Georgian economy in general. One very interesting point, and let me read this out, is that Fitch differentiates direct losses from potential depreciation of lari that are usually quite limited, and it calls much more sizable the risk that comes from loan book dollarization. Is this reason or a result, and what this approach changes in the whole analysis then?
Very good question, thank you. So I think on one side we have seen real life adjustments in the currency, and this I want to recall the 2015 oil shock on the whole region when the currency lost significant part of its value, more than 1/3. And we saw how painful that was for our customers, but then customers adjusted to it. Regarding the dollarization, you have to keep in mind that if you have a strengthening lari vis-a-vis your trading partners, which depends on the efficiency of the economy in long term, you will have a growing economy, and that way the dollar debt will reduce.
This crisis, and everyone is talking about it, is like no other crisis that the world has known, because the origin of it is not economic or financial like it was, for example, back in 2008. This is because of health issues, and we are looking, all of us, including you, I believe, we're looking to the remedy that would be a vaccine, hopefully coming in the near future. What could be such remedy for the economy at this stage?
It's a difficult question. There's no answer that solves all the problems. I think we have to make sure that we welcome FDI and we make sure that the investors that are here and investors that are knocking on our doors are welcome in this country. If you take care of your own investors and businesses, they have friends, they have other partners, etc., that come and knock on their doors and always say, can we invest in Georgia? Right now, we have seen that over the last few years, FDI has not really grown much, to say the least. In fact, it has come down quite significantly. The latest 1 year is probably because of COVID, but I think we are at a point when there's a fantastic chance to come out of this environment with a strong message to the investors that they are welcome here.
Wish you more certainty in these tough times.
Thank you very much, Elena, and same to you. And I hope that we will see a strong recovery next year for all of us.